Money FM 89.3. Best of breakfast. Companies to watch.
All right, with all the market turmoil going on these days, where should you be watching? Helping us out today, of course, is Dan Ko.
Watching when Ryan comes back from his holiday because he's always on and off every week. Hi, Ryan. Welcome back. Thanks for being here with us on Companies to Watch. That's a segment where we're going to spotlight and stock you up with ideas of listed companies that will call for your attention. So we're looking at market trends and risks, as well as hidden gems or warning signs to steer clear of. 8855-0893 and tell us whether you think it's going to be a hot or not. Ryan, you ready?
Yeah, where should we be looking?
Okay, Ryan, how many Singapore banks can you name?
Oh, all right. Let me look at my list of banks.
Yes. No.
DBS,
Okay.
OCBC, UOB. The Singapore banks. Does GXS count? Bank as well?
Yes.
Trust Bank?
Yes. Keep going, Ryan.
Oh, keep going?
Yes.
Oh, okay. Only a Singapore ones. How about
Yes.
Stanchart? Does it count? A Citibank? Maybank?
Yes. I mean, okay,
HSBC?
wait. Yeah, that's very... Okay, Ryan, all right. That's going a bit further than I thought. Okay, but we're only going to focus on three banks today. Singapore's three largest banks, DBS, OCBC, and UOB, who have been posting strong financial results from 2024, maintaining stable net interest income despite a slight decline in net interest margins. But I think you know probably where I'm heading towards, because with talks of Trump's tariffs just hitting pretty much every single part of the market, here in Singapore, the trio of banks are not spared. In fact, shares of Singapore's three local banks continued to slide on Monday, leading a broader market sell-off triggered by concerns over US tariffs. Now, Ryan, as of yesterday, DBS closed 9.28% lower to finish off at $39.28. That's the first time they closed below the $40 mark since November. UOB finished lower by 6.29% at $33.23, while OCBC shaved off 6.92% to end of the session at $15.47. And considering how much influence they have on the benchmark Straits Times Index, that has led to its decline of more than 6% to 3,540 points, just days after it breached the 4,000-point milestone on March 28th.
Yeah.
Thoughts on how markets are moving, Ryan?
Huge reversal, no? So prices these days of these banks are hard to come by. So the big question is it time to pick up these stocks at a, bargain?
That's right. Bargain might be up for talks. I mean, after all, we're seeing a broader market sell-off in not just the local banking shares, but all across the market. And according to calculations by the Business Times, since March 28th, Singapore's three local lenders have shed collectively $37.3 billion in market value. Now, while the banks are not immediately affected by US President Donald Trump's sweeping reciprocal tariffs, analysts have said that the potential rate cuts by the US Federal Reserve in response to slower growth caused by the tariffs could weigh on bank earnings. So I suppose this is more of like a longer pain.
Yeah, I think so, because when you hear about all the talk about tariffs and so on, the talk about a recession is also quite prevalent. People are trying to price it in. Is there going to be a global slowdown? Of course, this will affect banks because they lend money to various things. So that's part of the conversation. So people are trying to look for safety. Interestingly, banks are not it right now.
Yeah, that's strange. I mean, I feel like I've seen it somewhere before on a market report that pretty much every single aspect of the market would be affected. So it's hard to find any safe havens here. Analysts to analysts, while it's still unclear, potential Fed rate cuts could compress net interest margins faster than anticipated, pressuring net interest income for most banks here. And more notably, UOB would be the most affected by ASEAN tariffs. For the 12 months ended 31st December 2024, UOB derived $6.2 billion of its $14.3 billion in total operating income from outside Singapore. That's accounting for 43.6%, the highest proportion among the three local banks. And of course, all across the board, I've been seeing analysts just lowering their estimates and target prices for all three Singapore banks, which I suppose at this point in time, if you're willing to just double down on the losses, I guess this might be an entry for you, but at least as of now, I mean, the outlook for banks does remain a little bit blurred for most analysts and economists out there.
Yeah, so you have also the prospects of lower rates. This is where the Fed has been, well, at least what the market is expecting, more rate cuts as the US economy goes through a bit of a slump. The Fed might want to help out the economy. So that's also going to mean pressure on margins for banks. So one factor to look out for as well.
Weak retail sales and soft market sentiments may imply a downside to wealth and card fees for them. Trade and loan-related fees may also be at risk. And, finally, the bank's asset quality may be affected by weaker growth prospects and a sharp dip in oil prices. But then again, Ryan, some say that given their robust liquidity profiles and diversified funding mixes, it might go some way in shielding them from market volatility amid the global trade risks that we're seeing and growth concerns. In fact, lower interest rates, which you've mentioned before, are also said to support fee income growth, particularly in wealth management, helping to offset declines in the net interest income. So that being said, verdict for me, I think as of now, we're still yet to fully digest the impact or the potential repercussions of Trump's tariffs. So I'm probably going to go with a not. What about you, Ryan?
Yeah, I think it really depends on your investment horizon, right? When you look at the banks, it's always a good bet because they've got a strong business. Long term, normally they go back to the levels of where they usually are trading. So at some point, you expect them to return to the previous price levels. So something for you to think about if you might want to get an entry point to banks. At some stage, you might want to consider.
Yeah, for sure. Long-term horizon, of course, that's a good point for you to look out for. Now, Ryan, that's all we have for DBS, UOB, and OCBC now. Of the three banks, Ryan, just very quickly, can you name who's the biggest to the smallest?
Okay, I'm thinking DBS will be the biggest, OCBC, and then UOB.
Oh, very good, Ryan. Now, try this one. What does your partner and banker have in common?
They both have money?
Neither of them give you credit.
Okay.
And that's all we have for Singapore banks.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.